Hello friends, in this question we are required to prepare income statement for R Limited. Here information is available first of all on 30th June 2018. These are the opening balances of debenture, inventory, other receivables that are insurance and other payables that are electricity expenses. And these are the balances of non-current assets that includes land and building, fixtures and fittings, motor vehicles. Second part of this question shows the summary of receipts and payments during the year. Uh, these portion shows the summary of payments. These payments are for purchase, insurance, motor vehicle expense, wages, salaries, electricity expense, motor vehicles and debenture interest. Here information is given that all the receipts and payments were through bank only and all sales and purchases were on cash basis. Another information is about the depreciation policy of the company that shows that depreciation on fixtures fittings is 10% per annum and depreciation on motor vehicles is 20% per annum using reducing balance method. There is no depreciation for land and building. Third portion of the question shows the information available at the end of the year, that is on 30th June 2019. That includes the amount of closing inventory, that is 42,000, but out of it there is a damaged portion of 5,000. This damaged portion was repaired at the cost of 450 and again resold for 5,100. Second information is about insurance, that is amount 750 for the 3 months ended 31st July 2019 was outstanding. Third information is about the electricity expenses, that includes 600 for 3 months ended 31st August 2019. And fourth information is about expense split, that includes insurance that is chargeable to admin expense, motor vehicle expense, these are chargeable to distribution cost, wages and salaries we have to split between distribution cost and admin expense in the ratio of 4:1, and last is electricity expense that we have to charge in admin expenses. In this first part of question, we are required to prepare income statement for the year ended 30th June 2019. This already prepared income statement is given here. Now to complete this income statement, we must have some expenditure amount with us, that includes cost of sales, administrative expenses, distribution cost and finance cost. So I have shown these as a working note, cost of sales as a working note 1, admin expenses as a working note 2, distribution cost as a working note 3 and finance cost as a working note 4. Let us see all these working notes. The first working note is about cost of sales or cost of goods sold. So cost of goods sold, we can find out these way: opening inventory plus purchases minus closing inventory. Now the amounts of opening inventory and purchase we already have. The amount that we have to calculate is closing inventory. To calculate closing inventory, first we will put the amount available as on 30th June, that is 42,000. Now we will deduct the amount of damaged inventory, that is 5,000. Okay, so the remaining inventory with us is 37,000. Now we are going to repair damaged inventory. For that purpose, whatever repairing expenses are there, we are going to deduct, that is 450. So remaining amount is 36,550. Now this repaired inventory was sold at the rate of 5,100. So we are going to add this amount. So the final amount of closing inventory that we will consider here is 41,650. So let us complete this working note. Opening inventory 45,000 plus purchases 135,000 and deduct closing inventory, that is 41,650. So cost of sales or cost of goods sold we have here is 1,38,350. Now for working note 2, to calculate administrative expenses we will require these four amounts. First is depreciation on fixtures fitting, second is insurance, third is electricity, and fourth one is wages and salaries. Let us calculate all these four amounts. To calculate depreciation on fixtures and fittings, first consider the NBV on 30th June 2018, that is given in the question, that is 40,000. Now depreciation chargeable is at the rate of 10% per annum using reducing balance method. So we are going to charge 10% of 40,000. So the amount of depreciation is 4,000. Next is insurance. Insurance payment is total 12,000. Now considering the adjustment, first in opening balances the insurance amount receivable for the previous year 30th June 2018 was 1,000. So we are going to add this amount, and the insurance outstanding for the months of May and June 2019 are 500. How this amount arrived, that is shown here. So we are going to add the amount of 1,000 and 500, total 1,500. So the final answer of insurance expenditure is 13,500. Next we are going to calculate is electricity. The amount given in the question payment side is 2,700. Now we are going to deduct the amount of payables for last year, that is 30th June 2018 is 500, and amount paid in advance for 2 months of next year, that is July and August 2019, 400 rupees. How this 400 rupees arrived is shown here. So we are going to deduct total 900 out of this 2,700. So final amount of electricity is 1,800. Last portion is wages and salaries. Wages and salaries are 45,000. Now as per the information given, we are going to split between distribution cost and admin expenses in the ratio of 4:1. So we are going to distribute 45,000 in the ratio of 4:1. So in distribution cost the amount goes 36,000, and in admin expenses the amount of wages and salaries goes 9,000. So now we have all these four amounts of working note 2 administrative expenses. So here depreciation is 4,000, insurance amount 13,500, electricity 1,800, and wages and salaries are 9,000. So total of all these four amounts are total administrative expenses, which are 28,300. Now working note 3 belongs to distribution cost. Now distribution cost includes these three amounts. First is motor vehicle expense, depreciation on motor vehicle, and wages and salaries. Now in the question, amount of motor vehicle expense is already, that is 10,000. Wages and salaries amount we have just calculated is 36,000. The remaining amount, that is depreciation, we have to calculate. Now depreciation on motor vehicle, for that purpose NBV on 30th June 2018 for motor vehicle is 1,50,000. Now in the payment side there is the expenditure of motor vehicle. So we will consider this 50,000 as an increase in motor vehicle. So total book value of motor vehicle on 30th June 2019 is 2 lakh. Now as per the depreciation policy, there is a 20% depreciation chargeable using reducing balance method. So 20% will apply on this 2 lakh. So depreciation on motor vehicle comes 40,000. So if we will put all these three amount together, so motor vehicle expense are 10,000, depreciation on motor vehicle 40,000, and the portion of wages and salaries 36,000. The total distribution cost will come 86,000. Now the last working note related with finance cost. Here finance cost will consider the interest on debenture. Total debenture amount is 75,000, rate of interest is 10% per annum. So the finance cost is 7,500. Okay, now we have all the amounts. So let us start with this income statement. First of all, we will put the amount of revenue given in the question, that is 2,86,000. Then cost of sales as per calculation in working note 1, we have 138,350. We will deduct these cost of sales amount from revenue. So remaining is the gross profit, that is 1,47,650. Now we are going to deduct these two expenditure as per working note 2. Administrative expenses are 28,300 and distribution cost as per working note 3 is 86,000. So if we will deduct these two amount from gross profit, profit from operation is 33,350. And last one, that is finance cost, shown in working note 4. Finance cost is 7,500. So we will deduct this finance cost from profit from operations. So we have the final answer, that is profit for the year 25,850.